This stock has now just become even better value. And that stock is Nebius. Now, Nebius had their earnings earlier today, and here's exactly what happened. So let's start with the goods. Q3 revenue was $146 million, a 355% year-over-year increase. They just signed a massive new $3 billion deal with Meta. And adjusted EBITDA was $5.2 million loss compared to a $54.9 million loss this Q last year, showing a massively improved efficiency and scale with this business. However, let's look at some of the bad points. There was a lot of strong growth, however, there was still a net loss of 119 million. The revenue was below analyst expectations of $155 million. There's potential dilution risk with Nebius's ATM or at the market program to sell off 25 million Class A shares. Even with this being the case, they have released that the only real limitation that they've faced throughout 2025 is their ability to bring capacity online. Basically saying that they can't build the infrastructure quick enough, and that is exactly where the bottleneck is. And Nebius still has a massive amount of room to grow, with their expected target ARR growing to $7 or $9 billion by the end of 2026. Currently right now it's about 550 million. We can still see over 10 times revenue growth for this stock within just the next year, which is nuts. And if we look to the side at one of Nebius's direct competitors, CoreWeave, they've announced that they have a backlog of 55.6 billion. Around 5x their revenue, so we can clearly see there's still a lot of demand for these companies right now. I am very big on Nebius. I have around £5,000 worth of stock, and yes, although it has come down from its highs of $138 a share, investors are still saying this is a buy or a strong buy, with some analysts expecting that this could reach $206 per share, which is crazy, and potentially could 2x your money. But what are your thoughts? Do you think Nebius is a good stock to be in right now? Let me know in the comments below.